Walter, thank you so much for being here. So, just as a quick introduction, welcoming everyone to our first ever episode of First Generation Investors Executive Speaker Series, titled Professional Money Management and Financial Responsibility. Today, I am delighted to be joined by Walter Bayne, President and Managing Director at Cary Partners, an avid supporter of FGI. Walter, it's great to have you here. So thank you so much for taking the time to join us. To start us off, can you tell me a little bit about yourself and what made you initially want to get into investing?
Sure. No, thank you so much for having me.
Sure.
Started out getting in investing probably pretty much out of college. I got a background, my degree was in futures and commodity trading. So I spent some time, just some personal investing, and I got a degree in agricultural economics, so really focused on the commodity side. I went into the agricultural field, and to be honest with you, I saw a lot of family businesses and farms having to get liquidated for lack of estate planning, lack of liquidity, lack of investing, and felt like there was a little bit higher calling, and wanted to get in and help some of the families and that were around me and my family growing up, and people in the industry that I was in, try to help their lives be a little bit better and help them continue to leave a legacy for generations to come. So it really started from that background that drove me into being a financial advisor and into the wealth management business.
Yeah, no, that's an amazing, that's a really incredible background. So thanks for sharing that. So now more specifically on FGI, so looking more toward organizations like FGI, what initially attracted you to FGI, and why do you feel that organizations like FGI are so important?
Well, the FGI opportunity for our firm is, and for me personally, was really driven around education. When I first got in this business, as I said, I got in to support families and help folks. You folks have an opportunity to get into a classroom where professionals like me or others have had some resistance or difficulty to do. And it was exciting for me to meet the folks at FGI. So it was a little bit of full circle. It was one of those things that I've been trying to do for 20 some years, getting in classrooms and educating students on finance, investing, basics of investing, how money works, and to see a grassroots organization that was getting traction and ultimately doing what I've always wanted to do, immediately wanted to get on board, and was extremely excited to have the opportunity to be supportive of the organization and the growth of the organization. I'm a firm believer that there's a gap around investing and true financial education. And seems to me peers learn from peers, students can learn from other students. It's got success written all over it because you have folks that care and are trying to make people better, and that's what I want to be a part of. And
yeah.
So, that's really what drew me to it, was just the fact that you guys are doing exactly what I've always wanted to do, and provide an opportunity for folks to better themselves, which,
yeah,
hats off to you.
Yeah, no, absolutely. I appreciate that. And I have to say, I feel like education, like financial education specifically, is something that's, really kind of looked over and looked past, when it comes to formal education, even at the college level and especially at the high school level, something that isn't really, touched on or taught. And you find that students, in such a financially focused world we live in now, are really coming out of the education system. So I'd say poorly equipped to really kind of tackle the challenges they face later in their life that really everybody is facing at this point in their life. So no, I totally agree.
I couldn't agree with you more. It's there's a big void in financial literacy, and it stems from generations of investing in different ways. When we see people come into the office and I can look at their portfolios, I can pretty much tell you the generation they're from, because it's how investing has matured over the years. And you get, your parents are teaching you and you're teaching your children, and without a tremendous background in the financial markets, and you lead with opportunities of folks missing out or not understanding or making mistakes that harm themselves, or really are just misinformation. And so I think it's a
Sure.
tremendous opportunity to spark interest, and certainly there's plenty online and plenty of resources to learn on your own, but I feel like we spend a lot more time even looking at what next radio we may buy versus what stock we should invest in. So there's
Yeah.
there's time capital at work here. So if we can help speed that up and pique interest with folks, I think it's material.
Yeah, no, absolutely. I really couldn't agree more. And I have to say, from a personal perspective, it's definitely been a wonderful opportunity working with FGI. And you know, more towards you, we are incredibly grateful for your continued support. Um,
Well, it's not just me. I mean, our whole firm is full of folks that believe the same message. I mean, that's why we're here. That's one of the successful pieces of our firm is the fact that we're here to help our clients and our clients' families. And it's a team effort. So it's not just me. It's deep rooted in the culture of this organization.
Yeah, absolutely. So kind of continuing on that piece, at FGI, we have several different partners that do a number of different things within the world of finance. So can you tell me a little bit about your role at Cary Street Partners, what your role includes, and what your general day-to-day looks like?
I don't know if I necessarily have a general day to day. So currently I'm the president of Cary Street Partners. I also moonlight as a financial advisor still. So I still meet
Okay.
with clients, and I actually have a couple meetings later today. Is I
Great.
don't want to lose touch on why we're here. And I
Yeah.
have clients that entrusted me, their families have trusted me to protect them and take care of their financial well-being. So we take that very seriously, and I still do that. From the president role, over time here, spent a lot of time. I'll back up a little bit. Our group was one of the
Sure.
first groups at Cary Street that kind of Cary Street started as an investment banking firm and moved into a wealth management firm.
Hmm.
And the team that I was on was one of the first teams to join that created the wealth management business. And so over the last 14 years since we've joined, 14 and a half, I've had many roles in the firm. I've had an opportunity to see the wealth management business like very few people have, from really the ground up, and wearing a lot of different hats and playing a bunch of different roles and growing with the firm. And ultimately has led me to here, which is an experience that I've seen a lot of the different pieces in the firm, from compliance to operations to HR to our M&A opportunities, finance. You tend to touch a
Sure.
lot of different things, and we have a tremendous group of individuals that help us run the firm day to day. And having grown with them over the years and expand the firm and grow with it, that's why I say that my day is a little bit not traditional. I spend primarily, my focus now is on opportunities for the firm to expand our reach and footprint and find other like-minded folks that like to join our organization, as well as overseeing our wealth management offices to, I'd hope they say, try to make their life a little easier every day so they can go and take care of more clients. I rely on my technology and compliance and ops people to really keep the day-to-day running, but dealing with a lot of different opportunities that come up throughout the day, whether it be,
Yeah.
we're in the process right now of doing our reviews, and we finished our budgeting process last fall, and we have seasonal things that go on, not to mention just regular day-to-day activity, which involves a firm like ours that is growing into a full-service financial firm with our asset
Sure.
management piece and coming to market with some potential financial products, insurance. There's a lot of different moving parts. So it just kind of, the priorities change day to day, but my main focus right now is trying to expand our reach and find like-minded people that are, wanting to help families and wanting to be a part of an organization that shares the same interest.
Yeah, no, absolutely. And kind of taking a step back, the overall private wealth management landscape, as part of the FGI curriculum, students learning all about managing their money. So can you tell us a bit more specifically about what private wealth management is from a professional standpoint, and why people use a wealth manager? And kind of touching further on that trust piece you were talking about before, I'd love to hear a little bit more about what exactly it means to be a fiduciary and how you build that trust with the clients whose money you manage.
I would say there's a lot there to unpack. So You
Sure.
may have to break that down again for me
Yeah,
in a minute if I
absolutely.
get off on a tangent, which I'm known to do. I,
No
to
problem.
me, we're in the advice business, and uh, we work with hundreds of families and have for 20, 30 years, some of us 40 years. There's an experience factor here that comes into play. Um, Folks in the wealth management business can take on a lot of meanings. It can be we're managing assets for a set target or a set return or lifetime goals. We tend to start in our organization from a planning based point. So we start with plans, we get to know our clients, we're looking to find out what their life looks like, and everybody's life's different. I challenge people all the time to close their eyes and think about what their dream looks like. I rarely come across people that are the same. There are nuances to all of them. And so you
Sure.
spend time getting to understand what they are, focus on short, mid, long-term type goals, and we build investment strategies around each. Um, but it's truly comes from an advice standpoint. And to each individual that comes in here, they may have different needs. One could actually come here to have one conversation and leave with a different because there's a higher use of time. There was a void or something they were missing. Um, Wealth managers or financial advisors, they're folks that are here to really provide advice and help what I would call shorten the learning curve, provide a roadmap for your future financially that's there to adjust the map as life adjusts, because again, there's no straight lines and we all have challenges. And my partner likes to say we plan for the worst, but hope for the best. And
Sure.
we talk about finance and management and returns and investments. A big part of this is also risk, protecting people from, you've seen it going on to now and
Of
some
course.
of the other industries that are having a pretty difficult time and have lost significant value in the last couple of weeks. And
Hmm.
managing those types of components and risk, and people understand what real risk is. And it's an all-encompassing life kind of moment for us. We are available to help our clients through all types of events and retirement and passing of parents and children things, college, you name it. It's life, and that's that's where we spend a lot of our time. You mentioned fiduciary. Um,
Sure.
you know,
Hmm.
to me, I got into this business to help people, and all of the folks that I have around me did the same. And that starts by acting in the absolute interest of our clients and putting their needs first. So as a fiduciary, their needs are first above and beyond anything that we would do for ourselves. And I got in the business with that mindset. My partners got in that business for that mindset. And the way you build a business is by sticking to that, always doing the right thing and taking care of people, and you will have a very nice business as long as you give good advice.
Yeah, absolutely. The kind of concept where you win when your clients win, right?
That's right. That's right. And we win when our clients don't necessarily lose too. When we've been able to avoid a pitfall or protect them in a
In a
significant
downturn.
situation, that it doesn't even have to be market based. It
Right.
can be advice in long-term care. Took care of them and now they need some service. It can be a lot of. It can take a lot of different. Trying to think of what I want to say here. I'm sorry.
No, don't worry. A lot of different shapes, forms,
Yeah,
I guess.
a lot of different twists and turns. Quite frankly, as I said, just
Yeah,
life is not straight. So um,
of course.
we're in many facets of people's lives, and you
Yeah,
become a trusted person. And the advice doesn't just stop in financial matters; it becomes some in life matters. As we work with a lot of families, we see a lot of things, and when you go to retire or do certain things that you and I think, okay, we're 65 and we're retired, we're out of here. It's a big emotional event, and it takes time for folks to plan for that and understand it, particularly business owners or others that their entire life has been encompassed in some organization, or it's all they know, or it's what they have. It can be an event. And the same starting out. The first generation investors, where do I even start? Do I start with a Roth or an IRA? Do I save something that's non-qualified? Where do I
right.
put my funds? How do I do this without getting eaten up with fees? And
Hmm.
We're here to help with all of those types of conversations and build roadmaps for folks.
Yeah, absolutely. And to kind of piggyback off of two, I want to touch on two different points you made from that previous answer. So first, focusing more on having different clients with different investing goals. At FGI, we have a variety of different types of students with different backgrounds and different viewpoints, students with different risk tolerances, time horizons, different assets they like. So what would you say are the main factors you consider when helping a client meet their investing goals? And how do you manage multiple clients with different investing goals?
To me, it comes down to actually just spending time and getting to know your client. Um, Time horizons matter, goals matter. I would say the biggest thing that matters to me is just who they are as individuals and their overall understanding of what they have. I think the education piece that we provide as an organization, but also as an industry, that we should be providing to our clients, so they know what they own, they know how it's going to act in certain environments, they can sleep at night knowing how it's going to behave. I think there's an education component to that plays into
Mhm.
a significant part of the conversation. It's what you guys are doing, right? You're educating people, and we're doing the same. We're doing it every day. It, it to me goes hand in hand with risk tolerance, time horizon, different investment selections, their personal preferences. As I mentioned at the beginning, give me a portfolio and I can tell you almost a generation of where they are,
Yeah,
right?
I
You
thought
know,
that was pretty interesting.
it's fascinating, and it's things that you learn over time. People that
Sure.
were raised in the 20s act differently than those that were raised in the 70s. It's just,
Right.
they're just different, and there are different investment options, and they were raised coming out of a Great Depression. What do you trust, right?
Right.
So you can see those scars, if you will, carry generation to generation. My granddad said, I need to do this, right? And so it's that education piece, not that what we're doing now is new, right?
Sure.
Or great. It's just um, letting them understand what they actually own. And we get into different shifts in marketplaces where there are times to own some things versus others. And folks need to understand what they have so they don't make emotional decisions and sell at the wrong time or cause financial harm because they just didn't understand and fear took over. So
Yeah.
there's a coaching aspect to it, and fear is the biggest detractor of success in the investment side.
Yeah, yeah, absolutely. And on selling at the wrong time and kind of managing the ups and downs
Right.
of the markets, kind of piggybacking off of that piece, during the second and third week of the FGI curriculum, students are learning all about different asset classes like stocks and bonds, particularly. So, can you tell us exactly a little bit more about what exactly an asset class is and what are some examples of asset classes you might choose to invest in? And also, kind of a little further off of that, but can you share why it's so important to invest in multiple asset classes and how diversification helped your clients during such volatile times, like, for example, during COVID-19?
Yeah. So it's interesting. I might do this a little bit backwards. I
Okay,
might answer it just a little backwards.
no
Um,
problem.
we, one of the advisors I work with always had a saying that investing in the markets are like riding on the freeway. And
Okay,
think of a freeway that has 4 or 5 different lanes of traffic. We've
okay.
all done this, right? This is
Hmm.
all, we've all been on the interstate and we're riding along in one lane, but the other lane looks like it's moving faster. And so we jump over in that lane and then it comes to a stop and where we were was better, right?
Yeah, that's
And
that's really interesting.
and so when you're trying to figure out which lane you need to be in, nobody ever really stays put because one lane slows down. And so when you think about returns, you kind of want to get in kind of some of the faster lanes because you want to make a bigger return.
Yeah.
But if you start chasing that return in that faster lane, sometimes that lane's coming to a stop and you're
Hmm.
slow and steady on the right-hand side would have returned better over a period of time.
Right.
So think of the lanes of traffic at different asset classes. All right.
Okay.
This is a simplification of it and maybe not
No,
true in all
it's a
cases,
great example.
but think about, let's just pick, let's just pick 4 lanes. Okay.
Okay.
So the right steady lane, large cap stocks, right? So you
Okay.
have large company stocks. They're the right lane. That's the large company stock asset class.
Sure. Can you give a
That's
couple
big.
examples of of a
I
couple large company
sure will.
stocks?
Sure.
Okay. Awesome.
So we're talking about large company stocks. We're talking about companies that have multiple business lines that own a lot of different underlying types of businesses. Think of, ExxonMobil. You can think of GE, Walmart, whatever. You're thinking
Okay.
about big companies that have multiple lines of business.
Okay.
And those lines of business in different environments, some part of that business is typically still doing okay, and they kind of plod along. And that diversification in those business models and size leads them to sticking around and being maybe a little bit more, I don't want to use the term safer, but less volatile. As you move,
stable.
As you move to more to smaller type companies, not only do they start to shrink in size from the business lines, they become more focused in, think of Walmart, JCPenney, and Gap, right? So you got Walmart's got eye care, tire centers, banking,
a little bit of everything.
Right. They're selling groceries and home improvement, whatever. JCPenney, maybe some home goods, some clothes. And then the Gap, you're just buying clothes. So you just start narrowing down. So you got large, mid, small type companies. That's a simplification. And,
no, that's great.
So the mid lane, the next lane over would be your mid caps. They're going to move a little faster than the large. You're taking a little more risk. They get a little more narrow. Small caps a little faster. And then maybe international would be the farthest over. Sometimes I would say small caps probably faster than international at times, but you run into other risk, accounting, currencies, other types of things, accounting standards, currencies. So as you're moving out to the faster lanes, you're taking more risk. You tend to get more return. You add more volatility. So I think of those as lanes of traffic. What you want to ultimately do is get to your destination, and you do that by how much time you have right on the freeway. Right. So if you allow yourself more time, you don't have to be all the way in the fast lane.
Right.
So
that's a great way of putting it.
And so if you own all the lanes of traffic, depending on how you add the percentages to each lane, right? If you add, say, 30% to the faster lanes and 70% to the slower lanes, you've got a moderate thing that's going to kind of go along. If you don't want to be quite that fast, you can add more to the slower lanes and take less away from the fast lanes, right? Or if you want to be more aggressive, you move out to small cap, international, those types of things, you get faster, shut down your time horizon. But you may have a lot more stop and go with the brake checks and whatever, right? You're taking more risk. It may come to
more added halts there at the end, right? On the faster lanes.
So that's kind of the way I've heard it. I've elaborated on, added my own kind of spin to that, but always that lanes of traffic stuck with me. Is kind of an analogy of what that type of asset class investing is. So I just named 4: large companies, mid companies, small companies, international companies. You brought up fixed income, which are securities that pay some coupon or some tied to some fixed type of return. Real estate or others, commodities or others. I'm not getting into the crypto world. That's a totally
that's
different
a whole
issue.
Other conversation.
That's a conversation for someone probably smarter than me. But I think that when we look at diversification, though, the key here is that things move at different times in different ways. There are times when the international market is poised for better returns than our domestic market. There are times where larger companies are poised for better returns than smaller companies and vice versa. And so when you're diversifying your assets, you're trying to own pieces of those to manage your risk and your time to get to your destination.
Right. All trying to get to that destination. I think that was an incredible analogy. So really, thank you for sharing that. I think that was really helpful for even me to understand. So I appreciate that. So kind of moving on to the next piece, as I mentioned before, FGI has a variety of different partners, many of them doing very different things. And I sure know that when I was in high school, I did not know how a lot of these companies worked. So can you tell us exactly how Cary Street Partners makes money doing professional wealth management, kind of how your overall business model works?
It's not complicated. The majority of our business is fee-based, which or fee-centered, where we charge a fee for our services. The majority of those fees are tied to assets. The better our clients do, the better we do. Those fees range depending on planning services, investment management. It's negotiated with our advisors and their clients. And our firm is structured to support our advisors to do that kind of work. It's really an overly complicated business model. It's
No,
pretty
good.
straightforward. And being a fiduciary, it's all disclosed. Um, it's all upfront. They're all in contracts. There's nothing hidden. We're very straightforward individuals and work hard to make sure that all that's very transparent.
Great, great. Yeah, I'm sure your clients definitely appreciate the transparency. Great. So at the end of every semester, students put together their final capstone project, allocating that $100 stipend they get for being a part of the FGI program. So for the capstones, students are essentially acting as their own wealth manager by allocating that money to the investments they choose. So as coming from a professional wealth manager, do you think everyone should have a wealth manager? And in what situations do you think it may be beneficial versus not as beneficial?
So I might hear from this from my own partners, but I don't think everybody needs a wealth manager. Some people have passion in this business, or this industry. They understand it. They're do-it-yourselfers. They've done it a long time. They've had success at it. It's an interest of theirs. They're very bright people, and they're more than competent enough to handle their own finances. And so, no, I don't necessarily think we're for everyone. I do think that we provide a significant service. And there are a lot of folks who do need us that don't reach out because they don't understand what we do, or are scared to ask, or have had a bad experience, or, parents said, you don't need to do this, or whatever the case may be. We spend a lot of time in our firm, and I can speak for our practice, and getting to know not only the investor, whether it's the parent, the grandparent, working down generations to make sure we're available to answer questions, because there tends to be some transformational wealth in here that gets passed along in generations. We are a resource. We spend quite a bit of time, particularly with college students that are coming out of school, starting their 401ks. How do I start saving for a home? Really trying to give them some advice and be supportive. I think as I look at the wealth management business and the folks that need it, it's the folks that this isn't their thing. They don't want to spend a lot of time on it. They want the professional advice, or they end up in some complicating factors, estate issues, someone passed, or some financial difficulty in a family. We're a resource. As I mentioned before, life happens, and there's a lot of reasons to come and speak to people and find out some information. And a lot of it actually doesn't cost you anything to get some information.
Right.
And if it's an area that you don't feel that you have competency, there's a lot that people can do to prevent pitfalls that we talked about in the lanes of traffic, by either being in one lane or picking the wrong lanes for their ultimate goal. I mean, there's a reason for speaking to folks. Just to get a financial checkup makes sense. It doesn't mean you have to be with people full time. Just get someone to look over and give you an opinion. There's a lot of ways to do this, and our industry has shown it's continued to evolve and grow and provide different types of solutions for families. And we're trying to do that as well as the firm, to stay relevant and continue to adopt and make sure we're providing the appropriate services to the families that need it.
Yeah, absolutely. So really just, focus on having that extra expertise for the individuals and families that could really use it.
And it doesn't take much, right? One of the biggest joys I get are talking to younger folks, because if they get on the right path at the beginning, after 40 years of investing, the impact is so much greater. I mean, if you're 75 years old and retiring and coming to me for the first time, you've kind of already, your map is done.
Right. That time horizon piece, I guess, plays in there, right?
That's right. And we can maybe change the destination from one county to another, but I can't change it across the globe. But if you're young and starting out, you can really change your entire path by living within your means and saving. And everybody hears it: live within your means and pay yourself first. If you do those things, I've seen tremendous opportunity come befall young folks that have done that, and their futures are pretty bright. And that early investing is very material.
Yeah, absolutely. I think that's definitely one of the prime messages I think we try to get across through FGI. That the earlier you get in, during one of our lessons, we do cover compounding interest and kind of
Right.
see the effect of kind of go through an exercise, seeing the effect of how compound interest plays over, through a 30, 40, 50-year time span. And it's really incredible. It's so material, and it can really change an individual's life, which is why we're trying so hard to teach these lessons, as early as possible to, students who are 15, 16, 17, 18, because it really does have that long-term impact.
And that rule of 72 is a big deal. And it's one that is so simple that we don't spend enough time talking about something that is that simple.
Sure.
Um,
By the way, just for everyone listening, just define what the rule of 72 is.
Effectively, what it is you take your number of years divided into 72 and tells you how many, I'm sorry, take your returns, divide into 72 and it tell you how many years it takes to double your money. So simplest, for a simple matter, 10% return takes 7.2 years to return a double. So we use it all the time back in napkin as we're looking for folks, as we're talking to them in their initial planning conversations with their existing balance, with their deposit rates. We can back a napkin pretty fast, some time horizon based on some set return, what their
Mhm.
end nest egg looks like, or some variable thereof. But
Right.
just a broad stroke of a brush, but it is material.
Sure.
15 years speeds the number up, to roughly 5, and 5 years slows it down to 12. So or sorry, almost 15. It takes some time. So it's
Yeah.
it's a wonderful tool. It's easy to remember, and um, it helps us quite a bit.
Yeah. Yeah. Absolutely. Great. So kind of moving back to our last couple of questions we have here. A large number of our high school students and tutors are really interested in working in the finance industry, for their long-term careers. So a lot of them are going to be starting out after college in these entry-level roles. So can you share a little bit about what a typical day in the life of an entry-level employee at Cary Street Partners would look like?
On the wealth management side, we just actually we've hired a couple young folks just out of college here recently, and we're looking to do more of it, um, particularly in the financial planning degrees. And they're starting in really in the administrative function, learning the business from the ground up, understanding the different account types, how to process the paperwork, why TOD and other um, identifiers on accounts matter, why we set things up a certain way, so they understand the basics behind the recommendations that we're giving, the different types of accounts, beneficiaries, trusted contacts, really working through relationships with folks from the ground up while they're studying for their exams to get their licensing, getting their CFPs if that's the path they're heading. Um, but it starts with understanding clients um, and and building relationships, learning the soft skills, which sometimes are the harder ones to learn. It's not hard to understand what joint tenants right of survivorship is on a document. Sometimes it's hard to remember that there's two people in a relationship, or where the soft touch points are and those things, and how to communicate in a way that people feel that you're their advocate. There's a lot to that, but it really starts with a foundation of the business and understanding the different types of investments and why they're deployed in certain accounts and what the tax ramifications may be, and understanding just our industry vernacular, because
Mhm.
we all have our own lingos and investment banking and wealth management, and
Sure.
everybody has their terminology and almost a slang to some degree, and being in it and learning what those things mean, and also understanding trading and the nuances around trading and putting in different types of orders, and understanding how the markets work and how things are bid and priced and where the spreads are and what the actual cost is for a client. So really getting a fundamental basis of this business, so you become well prepared in conversations with clients to have that foundation to explain at a level that you can communicate with them what you're doing and why you're doing it and why it's in their best interest.
Yeah, no, absolutely. That's incredibly helpful. So thank you for sharing that. So Walter, this has been incredible. Thank you so much for being here and sharing your insights and your experience with the FGI community. To wrap up this discussion with our last question, what would be some final words of advice you would have for a first generation investor?
I thought about this quite a bit because to me, this is one of those things that really I think is impactful. And I had really three thoughts. If you just happen to ask this question, one is make your picture bigger, dream bigger,
Okay.
have a broader view. Um, I think we established I came from a rural community, very small community in Virginia.
Mhm.
I, my horizon expanded when I got to college. It expanded more when I graduated and went into business. It's expanded even more in this current opportunity. I think you have to make your picture bigger and look wider. Your lens needs to be wider. I think too many people they know this. Um, the second
So
thing
like
I
you mean
would
like from like a
say,
knowledge point of view, you mean like from just understanding more and kind of opening up the scope of what you understand.
knowledge, and then this point,
Okay.
you need to challenge yourself. And by
Okay.
doing that, getting to an area where you're uncomfortable. That uncomfortable nature means that you're growing. If you're very comfortable and satisfied, there's not a lot of growth. And so when I talk about a broader view, you need to challenge yourself to maybe go down areas that were over here, not here.
Right.
Um, and that if I was looking at myself, and I tell my children this, my son's is a sophomore now in college, it's don't limit yourself and broaden that view and take risk and challenge yourself in that uncomfortable in nature. It's not normal. You don't want to be uncomfortable, but that excitement slash anxiety will typically lead to better experiences or a more depth of knowledge, or it makes you it's what I would do different if I had to do things different, or the advice that I would give is broaden that view, take the challenges, challenge yourself, be uncomfortable, and trust people that are around you, that are your advocates, that are trying to help you. um,
Sure. Yeah. And on a challenge point of view, an analogy I always liked growing up was the fact that, when you're working out, you're at the gym, the way you actually build a muscle, which I didn't understand this until pretty recently, but you actually tear the muscle, get uncomfortable. And when you do that, it actually heals and puts itself back together. But as you do that, it actually grows. And that's
that's
kind of
right.
how you improve that. If you stay comfortable, you don't do anything like that, it's not gonna, you don't have that discomfort, that kind of struggle, you never end up growing. And I've always loved that analogy. So thank you for sharing that.
And the other side of this is make as many mistakes as possible, right?
Yeah, of course.
That's the only way that you're moving, is making mistakes. We all make them. If I'm not making multiple a day, it's been a slow day.
No, of course. No, I totally agree. And I always find that, mistakes and failures are always the best teachers.
Yeah.
So, learning a ton at this age often comes from making a lot of pretty big mistakes, but ones that are valuable in the long run.
And for people who come into this firm, I have so many points on this, but for people who come into the firm and they're young and they're in the wealth management business, the biggest thing that I try to tell them is stay true to who you are. If just be who you are. Don't try to be something you're not, because people will see through it and it'll affect your success. You have to be you. And it's you that got you here. It's you that got you opportunities. Just be you. That's why you're here. You don't have to morph and change and do a bunch of things. Be you. Um, so this stuff, life changes, we change. But I think if we challenge ourselves, even, I challenge myself every day. You want to know how I got here? It's you raise your hand for opportunities to come along, and you get out of your comfort zone, and you hope that you have mentors and people around you that help guide you and coach you along and help you be better, and provides it. And, as you do that, you get more opportunities.
Yeah, no, absolutely. I couldn't agree more. And honestly, you shared a ton of really valuable information, over the last 30, 40 minutes. So I just want to give you one huge, huge, huge final thank you for not only coming on today and sharing all of this insight and experience, kind of expertise and kind of all the information you had to share, but for you and Cary Street being such continued and amazing advocates and supporters of first generation investors. We really do mean this when we say that we could not be fulfilling our mission without you guys being there supporting us. So really, thank you so much.
Well, thank you. And truly, from my side, I'm grateful for the work that you're doing. We're grateful to be sponsors of it. I suspect this is going to be a very long-term partnership, and we're here to be a resource in any level we can be. So really appreciate the time, Noah.